at least the first portion. I'm not going to record all day long because the video would be too big. So I'm going to record the first portion of it, and it kind of gives everyone in the room a background and kind of what we're doing here, and probably will provide you with information like you learned yesterday. Okay. First and foremost, do not ever, never, ever, ever enter futures right before a market report. Use the binary options or spreads to limit your risk. We're always using 2 time frames. Good morning, Keith. All right, now I'm going to type in the different time frames that we use in the room. The higher time frame is your 45, lower time frame is your 3. Higher time frame is your 180, lower time frame is your 12. Higher time frame is your 720, lower time frame is your 45. Higher time frame is a daily, which is 1440, and your lower time frame will be 90. Okay, there are no other combinations for me. Does everybody understand that? Now, we will reference the higher time frames because they do impact our day, okay? And I'm going to show you that in a minute. A great example was yesterday. Everybody learned the importance of paying attention to the higher time frame magenta peak. Why? Because it overrides the smaller time frames. It's dominant. It's the elder. It's the one that's going to say, hey, don't trade the 45-minute magenta peaks, because really it's playing out on the 720 or the 1440. Everybody understand that? All right. And I expect you to read the disclaimer. I'm not going to sit here and read this disclaimer to you. Everybody in the room is above 18, and I think y'all can read. I'm not going to read to you, but I am going to stress that trading is risky regardless of whether it's binary options or futures. I'm not a CTA. I'm a professional trader and educator. All the trades in the room will be done in the simulator mode, and that is to protect me from potential lawsuits because we love to sue in the U.S. Okay? Any questions on that? I'll give you a few minutes to read it if you want to. All right. Respect the higher time frames. I call it respecting your elders. It's something that I was taught as a child, and I just do it in trading. Okay? When a magenta peak appears on a higher time frame, do not expect the lower time frames to automatically retrace to the ATR. Why? Because the higher time frame is the one that is going to dominate it. Yesterday, the ES, this is a 720-minute chart. What happened? The market went straight up to that ATR. Hello, pay attention. On the USD JPY, got a magenta peak, straight back to the ATR. On the Euro US dollar, remember I told y'all yesterday that it was coming down. It did come down, and it's created a magenta peak on the 1440. Pay attention to that. I don't analyze the 720-minute chart intensively. I don't analyze the 1440 intensively. What I do is look to see, are we at an ATR or do we have a magenta peak? Why? Because that affects my day. Okay? That means if I'm trying to trade those 45-minute magenta peaks, I'm going to have trouble. Why? Because the higher time frame, either the 720 or the 1440, are dominating just like they did yesterday. Okay? Don't go against them. You're at that suicide mission. All right, a trend trade. Okay, you're always trading into the higher time frame. 45-minute in this example is your higher time frame. Notice that the ADX does not have a magenta peak. Okay, it's not overbought, it's not oversold. Go in the direction of the 45-minute. How do you enter? At the ATR. Any questions on that trade? If you know volume divergence, you can pull in volume divergence. If you're still learning it, then you just enter at the ATR because you don't know how to use volume, so you just enter at the ATR. Any questions on that concept? All right, let's go to a counter trend trade. Counter trend trades are my absolute favorite. I don't know why, I just know that they are. Okay, you get an ADX magenta peak appearing on the higher time frame, just like you did here, and it's evidenced because the ADX strategy is appearing on the upper chart. Do you see how it says short number 3? Okay, this is an ADX trade back to the ATR. Okay, the lower time frame ATR, which is a plus sign, must be the opposite color of the ADX line. That means if this ADX line is blue, I automatically know I am looking for a red ATR. It would always be the ATR on the 3-minute, Don, because you're going into that trend on the 45-minute. Sometimes you may be at an ATR on the 45 and the 3 together. So in this case, the ADX line is blue. I know that I should have a red ATR over here. Now, if you notice, this line lines up both charts. You see it right over here on the 3-minute. You see it here on the 45-minute. I know, wait for the ATR to be flipped. Wait for them to come back and test the ATR, which they did. Then you can go short. Okay? Now, if you look at the volume on this one, you can see the volume was diverging right where it entered. That is not a component of the ATR strategy, okay? You are relying on your volume reading skills to enter that trade. If you have not built up the volume, then you just enter. It is a very low risk trade, okay? Now, the price should test the ATR, but it should not break the ATR, okay? A test equals, during the U.S. session, 10 ticks from the ATR, you're looking for an entry. During Asia, during Europe, you can decrease that to 5 ticks. The U.S. session is the most volatile session. Does everybody understand? Any questions on this trade setup? Now is the time to ask the questions. All right. Stops on futures, 15 ticks across the board. Before it reaches the ATR, Evelyn. Because it doesn't always touch that ATR. So, you know, normally during Asia, during London, it will go to within 5 ticks. During the U.S. session, because it's more volatile, it's 10 ticks. Okay, in general, your stop should be 5 ticks off the ATR, okay? Now, this is where I will play with the strategy, because remember, we're using 15 ticks across the board, right? That's our stop. During the U.S. session, okay, when it's more volatile, I'll say, okay, if price is within 10 ticks of the ATR and my stop is 5 ticks above that. So that gives you a 15 tick stop. During Asia, during London, then I want it to be within 5 ticks of the ATR, but I'll go 10 ticks off of the ATR for a stop. Sometimes I pull that down even closer, so I might only be, you know, 5 ticks of risk or 10 ticks of risk. That is dependent on market conditions, okay? That's the closest I can get to explaining how to do the stops on the futures, okay? Now, your profit targets always double the risk. Always. Okay? That's the minimum goal. But you can also, if you're short, as price is moving down, you can offset the previous bar high. Once price has moved 10 ticks in your direction, you can take the previous bar, offset the high by 5 ticks. That would be enable you to pull down your stop quicker. Does everybody understand that one? If you are long, then you would offset the low of the previous bar by 5 ticks. 5 ticks is my magical number, okay? Once price has moved 10 ticks in your direction. Any questions on that one? Okay, no questions. We'll go on to the next one. Binary options, we don't use stops. We only use low premium trades, which is out of the money strike prices, okay? Typically, we're taking less than $15. We're setting a profit target at about double the risk. So if we enter a long position for $10, we're looking to make at least 20. So if we entered at 10, our profit target would be 30, okay? Sometimes we can get more. Yesterday was a great example. Y'all remember we did the Wall Street for 4:15 expiration or 4 o'clock, one or the other. And we went in at 24. We set a profit target at 58. But we knew that the magenta peaks were coming in, so we knew that it was going to continue up. I actually removed the $58 profit target in the room. Ended up coming out sometime yesterday afternoon. It was up at 76. So that's when I got out of it. Does everybody understand that? Now, if you can't be there to watch it, set your profit target and go on. That's all you can do, okay? You have to be sitting there watching it to be able to move that profit target and go with what the market's telling you to do. Now, spreads are a little bit more complex because you have a floor and you have a ceiling, okay? The floor is always the number on the left. The ceiling is always the number on the right. Which one do you go into depends on what your bias is. If your bias is to the upside, you buy the floor that is closest to price. So in this example, the euro US dollar is trading at 09.19. The 09.30 is the one closest to price. Okay? If you go in that, you're risking about $31. It's the difference between the floor 09.30 and the offer 09.61. Your profit potential is from your entry point at 09.61 up to the right number, which is considered the ceiling, okay? So in this case, it's 1180. So that's your profit potential from 1180 to 0961. Now, if price, let's say, closes at 0965, you have made $4, okay? Because the expiration price was 0965, your entry was 0961. Everybody understand that? Any questions on that? What if your bias is to the downside? If your bias is to the downside, then you're looking at the third one here, okay? This is the one that is closest to price, okay? 0930. The premium is 0887 to sell it. You're looking at $42 of risk, okay? Now, how much profit can you potentially make? That would be from 0887 down to 0680. What if the expiration price is 0880 at the close, at the expiration? Well, you've made $7 of profit. Everybody understand that one? Now, how do the spreads differ from the binaries? It's very simple. Binaries are either true or false. Okay? Spreads actually use the expiration price to determine whether you make money or you lose money. Your risk is always limited to whatever you paid on entry. So in the case of the upside bias, your risk is $31. That is the absolute most you can lose. On the downside, on entry, your risk was $42. You can never, ever lose more than that $42. Okay? But let's say that you entered at 61 and price actually expired at 90. Okay? You would actually only lose $30 instead of $31. So your risk can actually decrease on the spreads. It cannot decrease on the binaries. Either you're right or you're wrong. Any questions on that?